Ladies and gentlemen, today is the 25th of February. Another day, another bloodbath, another big bloodbath. We have a lot of things to cover. I want to cover with you guys the liquidation data. I want to cover with you my mid time frame Bitcoin thesis, my Ethereum thesis, my macro view on Bitcoin, and if we have time, we're going to cover altcoins as well. So, first things first. Bitcoin dropped and immediately everything dropped. The funny thing is, last week, more than 400,000 Ethereum got stolen, hacked. And price did not really do a lot, right? But today, Bitcoin dropped and everything dropped, and especially Ethereum. So think about that. So, liquidation data. Listen, it's very easy. This is something you can check yourself, coinglass.com, liquidation data. In the last 24 hours, $1.41 billion got wiped out. And probably this number is way higher because CoinGlass cannot extract all the liquidation data from Binance. So probably this could be even around 2 billion or even 3 billion. But with the data they have extracted, with certainty, they can say that more than 375,000 traders, or I should say positions, were liquidated, because a trader can have multiple positions, right? And that's a lot of money. And if you check this chart, you can see this trend where we see more liquidations, stronger liquidations here. We can see them here. Here we got a few of them. Here we had probably one of the biggest liquidation events ever in crypto history. And today we see again a new one. And listen, I've shared this today, but this was what I shared in the third week of January. I'm positive we will see bigger liquidation events this quarter. And I haven't changed my mind. I still expect more liquidation events this quarter to shake out more people, and especially those greedy people who are trading with leverage while they actually shouldn't. This is a tweet from me from beginning of January. Here again, a lot of people, they got liquidated. It wasn't even that severe, but still, it's a decent amount for you could categorize this as a major liquidation event or a big liquidation event. And I believe my thesis was the first part of this quarter is for you to survive, as I expect more liquidation events. What does this actually mean? It means if you do not know how to use leverage, stay away from leverage. It's really that easy. If you do not have a proven trading system, stay away from leverage. Just buy spot if you have any conviction and stick to it. If you have a trading system and you have that mindset, the trading psychology, and a good understanding of market psychology, a good risk management protocol, money management systems, then this might be the route for you. Honestly, this year, I only traded 4 times. 4 times. I've been waiting until the market was giving me an opportunity, or what I would assume as an opportunity, as a trigger. I'm not forcing things, because we can talk a lot about this. Let's do next time like a more trading psychology slash trading session. But the point I want to make is, never ever force a trade. The trade should come to you. You should understand your system. If you do not understand your system, if you don't have a system, then trading is really not for you. And you cannot copy other people's trades. That's just impossible. That's not sustainable. The market can change and people can change their thesis immediately in an instant. You do not know that. They know that. They have a very different, risk profile, the way how they see the markets. Really, your only way to survive is to understand trading, to understand the market, And by being proactive, just copy other people's trades is not gonna help a lot, honestly. Um, Listen, a few weeks ago, or I should say like last week, I was seeing that squeeze. I was talking about that squeeze, but I was also concerned about the mid level. Um, I was saying that 99.5k is around the corner, which pretty much aligned with this mid level. We got a rejection, and this is what I would say a very hard, strong rejection, right? So we are now out of this range. So my thesis, I'm very transparent with you guys. I shared this last week, and I was saying these are my scenarios. Long now set stop loss below the average VWAP, anchored VWAP. Sorry, not my preferred style. Long if Bitcoin prints a swing failure pattern around 88, 89k. That's my preferred setup. And this was my second preferred setup long after the reclaim of the mid level. So I was kind of disappointed when Bitcoin did not reclaim this level because that would give me more confidence to open a position. It didn't. So what did I do? I did nothing. Knowing when not to trade is more important than knowing when to trade, period. Always. So could this be the swing failure pattern? Maybe. I'm not 100% convinced. Normally, what I would love to see is a swing failure pattern when it's out of the range and a bullish divergence is forming. Could be on the RSI, could be on the OBV, could be on the CCI, could be on the MVI, could be on any oscillator. But I'm not seeing that. So I see actually bearish retest here on the RSI on the 1 hour, on the 4 hour as well. That's also how you can identify a bearish retest, not only based on price but also on the oscillators. That's also how the inventor of RSI used RSI. This doesn't really look good. Again, my targets for this range, because this is a big major range, right? The breakdown target is 77k. The breakout target, so to the upside, would be 120k. What will happen now? I really don't know. I find this pretty difficult, especially if you difficult to maintain the bullish thesis, unless I see like bullish divergence on the RSI or on the other oscillator, and then reclaiming this level here. But I'm not seeing that. I'm just seeing a lot of weakness. But also this concerns me a little bit. What do we see here? We see a major gap, like a volume, like a very low volume node. What does it mean? It means that Bitcoin, we need like one little small trigger, and it could easily cascade all the way down to here, around 77k. Hence the reason why I said my breakdown target for Bitcoin is 77k. It's basically not only based on the volume profile, but also basically the classical way how you determine a target when using a rectangle. If we zoom out a little bit, this range shouldn't be a big surprise, right? Because we have seen them before. We have seen them here. This was a very long multi-month range. We have seen that range here. We have seen that range here. And I've been saying that this range reminded me to this range, although the structure doesn't really very much align. But we could say that this range came from this range, right? This range broke out, and then we got this consolidation. We broke out from this multi-month consolidation, and then it ended up by doing here its ranging. So this reminds me actually to what we had here, what we had here. And what are they? They are actually basically swing failure patterns here and here, because when things are going down, and let's go back in time, also from a psychology perspective. And let me delete these things, these events not relevant for now. Yeah. So what do you see here when things are when this is happening? A lot of things are happening actually. This dump happened quite quickly. One, a lot of biases will stack up from negativity bias, confirmation bias, crowd herd bias, recency bias. A lot of psychological pitfalls and biases will basically, slip into your mind and thinking, okay, now it's actually game over. Because what you see here is a very negative price action, and negativity has way more weight in our mind. That's one. Secondly, when things are going down, we assume it will continue going down, disregarding what happened before, disregarding the context, disregarding other major levels. So there is still a probability that this will end up as a swing failure pattern, but there's a big but. I want to see strength. I want to see the oscillators curling up. If I would see, for example, this RSI going through the 30 level, and seeing a bullish divergence, for example, on the 4 hour, this would give me more confidence, and then I would be more than happy to open a trade. I also believe from a risk management perspective, but also from a risk reward perspective. Wait, where is it? Oh, here it is. Sorry. Imagine this is going to wick, right? We're going to see a big wick. I would aim for the mid-level. This could present you like a very nice, interesting risk-reward ratio for a swing trade. But again, I still believe it's too early to make that decision to determine whether this is something that will continue going down, or a swing failure pattern. For a swing failure pattern, again, I want to see strength kicking in, and for now, I will just wait. If it isn't swing failure pattern, I will wait patiently, and I will see if the price can enter into this breakdown target around 77K, which pretty much aligns also with the CME gap. What else is there? We have Ethereum. And this is quite surprising, right? We had this major hack, 400,000 Ethereum got stolen. Not much happened. Bitcoin is sneezing, and look what's happening here with the price. I assume if you're not seeing any swing failure pattern on Bitcoin, you see this range here. Probably Ethereum will re-enter this range if we are lucky. If we are lucky, really, because this gray box is not here for the fun. This actually represents a multi-year SNR level. Look how big this is. This is like 1,500 days. Imagine this would be really the worst case scenario, not only for Ethereum, but altcoins as well. Even I would feel this if this is happening. Oh. If we're gonna lose this SNR level, let's go to the 3-day, which makes it a little bit more easy to see. If this is a range, and luckily enough for us at that time, it reclaimed this mid level, or this level. It's not per se like a mid level. It went all the way up to range high. Everyone was euphoric and happy. It got rejected quite hard. It even got rejected here. If we lose this box, if we lose this level, I mean, it will re-enter here. That wouldn't be a good sign, because we haven't been there since when? Since November 2023. this would be very, very negative for Ethereum and very negative for altcoins. Um, so the ideal scenario maybe might be like strength kicking in now. We see this long wick, very short lived. I wouldn't be surprised to see something like this. A swing failure pattern there. But again, it's still too early. We need to monitor the markets and then see how we're going to play this. Swing failure pattern or bounce from support. But definitely I'm not interested in I have Ethereum as like a spot back, but for a trade I'm definitely not interested, totally not interested to buy Ethereum right here, right now. And then we have Ethereum against Bitcoin. This is a parabolic move. Like the parabola actually really happened from here. This was this provided us like an argument of maybe the parabolic move is it's done, it's over. But no, this is another sign of weakness. This is another like a multi-year SNR level. You could do it this as well. I rather prefer to have it different. I see this as a very important level to reclaim. If it could reclaim the level, very good days for those who are holding Ethereum and the Ethereum ecosystem and altcoins in general. A bearish retest here. Well, no need to explain, but that will be very, very bad for altcoins. And then we have here Bitcoin dominance, and this Bitcoin dominance is without taking into consideration the altcoin, the stables. This is big. This is this is just actually confirming what happened here, right? This is just showing us that Ethereum is weak, altcoins are weak, and the Bitcoin dominance is only growing. It sits here at 66.6%. Again, this is without taking into consideration the stables. So the market cap of the stables has been, I've taken them out by using a formula. And then we have here the regular Bitcoin dominance. Oh wait, it isn't the Bitcoin dominance. Here it is. Well, this looks strong as well, right? No need to fade this. Again, it's a meme chart, as in you cannot really, buy Bitcoin dominance or add Bitcoin dominance to your portfolio, but it gives you very insightful information. I was seeing here, and I shared that bearish divergence is just like a warning sign, right? It's not something you should act upon. But listen, this is not a bearish, really like a bearish divergence anymore, as it pierced through this trend line. Probably it will take out this this high here on the RSI, this one here, and then that would fully nullify or invalidate that bearish divergence. So with that said, I would say be careful with altcoins. Be careful with altcoins. So what else is there for me to share with you? Listen, I still believe that, we all believe and we all know that this cycle is very much different compared to other cycles. And there are like a few reasons for that. One of them is the ETFs. There's a lot of buying appetite. More than 3 million Bitcoins have been scooped up through the ETFs, both up by countries, private companies, publicly traded companies. 3 million Bitcoins. That's 14.5% of all Bitcoins in the total supply of the 21 million Bitcoins. And the funny thing is, well, it's actually not funny. It's actually pretty sad. 3 million Bitcoins are actually dead. They're not accessible anymore. It could be 3 or 4 million Bitcoins, according to different studies. So there are only like a few Bitcoins left, honestly. And I think the race to, to acquire them started a long time ago. We had here Saylor as well. It's always good if Saylor buys Bitcoin, because I believe if he buys Bitcoin, I rather prefer to have him or his company, MicroStrategy or Strategy, because they renamed. I rather prefer that they have 2.5% of Bitcoin supply rather than anyone else, because with Saylor Micro or Strategy, there's a high probability that they won't sell their Bitcoin, maybe using it as a collateral, but I do not see them selling Bitcoin. I shared this thesis here. Saylor stacks 2,500 Bitcoins. What's next? Dump incoming. I shared here that this is actually a major bullish long-term signal, but it has always short-term implications. Now, I'm happy to explain this. I'm saying here that when massive buy orders like this hit the market, they get absorbed by existing liquidity, even if it is the OTC. So what does it mean? It means that a big buyer has been absorbed. If there's like a big buyer of that magnitude, if it has been absorbed, it opens actually the door for short-term traders, especially short sellers, to take a position and try to sell, because they know Saylor won't buy in probably in the next in the next coming period. So that's where the short sellers actually step in, and leverage traders see an opportunity to short the market, targeting areas where the buying momentum has already processed, so it has already been absorbed. They are betting on a pullback, knowing the big buy wave has already done its job. So it's very unlikely that another 2 billion order will happen again. So short sellers, I still believe they don't control the market. Spot traders do. And in a market like this, shorts are often forced to cover the positions quickly, which can spark sharp moves back up again. And this also supports my potential swing failure pattern thesis. So what to expect? I shared this yesterday. This was even like from a while ago. But I shared a similar thesis yesterday. Short selling is happening now that the big buy order has been absorbed, but don't be surprised if these short covering their positions trigger sudden bullish reversals. And that's why you often get these V shapes. My base case scenario is a swing failure pattern. The market loves to catch traders off guard. By the way, this is from 13th of January. However, I shared a very similar thing yesterday. I hope this video helped, ladies and gentlemen. If you appreciate these videos, if you appreciate me as much as I appreciate you, smash that like button for me. Subscribe, share this with friends if you want. Leave a comment. If you want me to cover one of the altcoins, leave a comment and I might cover them next week probably. Until then, stay safe, don't get liquidated, and God bless. Bye-bye.